Welcome, everybody. Good afternoon. We're happy to be back at MPC this year. For those this is towards the end of their day, thank you for hanging on with us before your happy hour. We appreciate it. And I think this session will do a good job at tying in some of the recurring themes that we've heard throughout other sessions in terms of real-time payments and where the market is going and what customers desire. So we're happy to expand on that. My name is Morgan Johns. I'm the Vice President of Integrated Payments at Bluefin Payment Systems. And have been in payments a little over 12 years now and focus specifically on SaaS organizations on the merchant acquiring side. And so this topic is very near and dear to my heart as we've seen a lot of the trends play out in the last several years that we were not able to talk about until today. Our abstract, just the Payfac model and how we have ISVs and SaaS organizations adopt some of these payments. We'll dive into some questions specific to that. If there's time at the end, we'll allow time for questions. But I would like to allow my panelists to introduce themselves. We have Rustin, Stephen, and Madison, so I'll allow them to introduce themselves in more detail. If you could just share your company name along with your role in the organization, that'd be terrific.
Hi, Rustin Miles. I'm CEO of Payfactory. Payfactory is a horizontal hybrid Payfac as a service, it's a mouthful, provider. We provide payment facilitation services for ISVs and have worked with all the folks on the stage one time or another as vendors or also colleagues at Bluefin. So I'm really glad to be here.
Hi, Stephen Velasquez. I'm head of partner business development for Elevon. So welcome everybody to the Elevon dorm because our office is right next door. So we spend a lot of nights at this awesome Westin hotel, but been with Elevon US Bank now for 13 years. And like I said, lead up the partner business development team. We've set up a partner journey, which is, you start with referral, can move into agent, go into ISO, and then pot of gold at the end of the rainbow is payment facilitation. So we layer integration on top of all four of those, just depending on where folks are at within their payments journey themselves. But excited to be here today, and thank you for having me.
Great. My name is Madison Danini. It's a little misleading up on there because I just got a new job in the last 4 weeks. But I still am with US Bank. I was in our treasury management department as a working capital consultant, optimizing client processes. And now I run revenue strategy for our corporate and commercial clients on the Elevon side. So went from treasury management to merchant, kind of all in the same family. So hopefully I'm able to bring kind of a unique perspective to this panel today. And I've been with the bank for about 5.5 years. And thankfully, I live down the street, so I never have to stay at the Elevon dorm.
Excellent. Okay, with that, we'll get right in. Want to set the stage for a foundational question that I think will play into the other questions that we have and just what the shift that we've seen in the industry with payment facilitation specifically over the last several years, which was non-existent 10 years ago. So just what are your perspectives on how the market has shifted over the past few years specifically?
Yeah, PSPs came out in the beginning for e-commerce, IPSPs at the time, right? PayPal. And then they dropped the I, and PSP did that for Square, right? And then moved it over to retail. And so when the payment facilitation program, that was MasterCard's word, and they dropped the PSP, Visa did, and then it became payment facilitator program across the board. But when they dropped, when they provided that out, a lot of the earlier adopters outside of those sort of coastals, we're really just kind of thinking of as fast ISO. How fast can we get this? Can we just get away with this cranky underwriters and this risk management people that are getting in the way of making money? And then what happened was they got those folks out of the way of making money and lost a lot of money to risk because when things happen at the speed of software, things can happen really fast. And so I think that's was sort of what I would call Payfac 1.0. And what I really started to see and what got me excited 20 years into my career about something new in payments. If you're in payments for the new or if you've been payments for a long time, there will always be something new and exciting. But was just to see that the transformational shift, I think we'll talk a little bit more about this too, really from integrated payments to embedded payments, and really just watching software come into its own. It's interesting to see that software can really help the risk model because when you're looking at a chiropractor software or a dentist software, hey, you actually know some things about the merchant that's using that. They're a dentist. They're probably accredited. You can check that out. You know what kinds of risk models and profiles they should be, what their transactions should look like. So creating these barriers to entry, if you will, actually decreases risk and makes for a better Payfac model for everything to be in software. So I've just really been excited to see. A lot of you know me, I'm big into security, and I know risk's a little different, but they're probably cousins. Just to see how Payfac has actually been used in this sort of 2.0 to really reduce risk and offer the same original promise, which is frictionless, fast onboarding.
I couldn't agree more, because it still is the number one thing where folks want to join payment facilitation is because quick, easy onboarding, right? You don't have to deal with the clunky way of trying to board a new customer. And then it's also for many folks that are kind of evolving from, let's say, a more mature payments company like an ISO and evolving into a payment facilitator. They want to carry their brand forward, right? So they want to keep acquirers, banks kind of on the backside. They want to make sure that their brand is forward to their own end customers, or sub-mids as we call them in the payment facilitator world. But what's interesting about where we've evolved, even from the last time we talked about payment facilitation at this show, I think now across North America, it's gone up by 18%, the number of registered payment facilitators. So we were sitting at 232. I remember the number because we were talking about this last year, and it's all the way up to 285, 290 right now for registered payment facilitators. And as Rustin knows, it is not easy to board a payment facilitator. It is a process in order to get not only approved by the bank as far as looking at your KYC, AML policies, then you have an integration aspect to every single one of these. And then finally, you just have, the different kind of treasury management, banking stuff that Madison works with us on. So
yeah, no, that's what I was going to say. I mean, I think from my perspective, it kind of used to be a very merchant card perspective, and now it's really broadened into the faster payments, which is part of this panel, right? Looking at real-time payments. Now FedNow is live, right? It's not just a card payment. There's a lot of influences in the industry that are pushing towards not just accepting card. And so I think payment facilitators are now looking at to say, what are the alternative payment options depending on my customer base?
Perfect. No, that's great. And I'm glad, Rustin, that you mentioned the shift from integrated payments to embedded payments, which is one of our next questions I want to touch on, because in my world, that's been something that I've seen. ISVs, they want to, there's the quick onboarding, there's all of the friction up front, but the other part of it is they want their core software solution to be the main part of their business, and they want payments to be more in the background. And so how do we make that happen? And Payfac is a step towards that. But just from your perspective, what are all of the drivers that have played into merchant and ISV side this shift to embedded payments?
Yeah, so all of us who kind of got on early in the integrated payments bandwagon, which I think is most folks that have been in the ISO processing world for the last 15 years. That's cool, right? It's integrated. You get your software, you can turn it up for payments. They do the payments and they do the software, and it's integrated. But that's not really what software wants, right? To your point, the UI, the user interface, the user experience needs to embed all of that. The next chiropractor or dentist, picking on them today, that graduates doesn't want a merchant account, a bank account, all these different things, and a payment processor and all that, and a practice management system. The next one that graduates wants an app. They want to download an app and they want to run their business, their vertical work and their payments, and they want everything embedded in there, and it needs to look and act and feel. When I use Robinhood to invest in something, I'm there, and 5 minutes later I've made an investment. And by the way, that's from downloading the app, signing up, putting my debit card, and making an investment. I mean, it's pretty amazing what's out there. But that's the kind of embedded situation I think that software is looking, like you said, they want to control that experience so that they can perfect that experience so that it's a natural experience for those merchants to do more and more business with them and for it to be sticky. So payment facilitation is the way that happens, right? And it's not just embedded payment acceptance, it's the whole experience from the merchant side. And the merchants have been overlooked, I think, for a long time. It's like, how do we get more acceptance? How do we get people to pay faster and pay more and do this stuff? But also, what about the merchant onboarding? And I think when you look at some of the big names out there, where you can sign up and be taking payments in 5 minutes, how does that whole onboarding, how does the surfacing and reporting of information, I don't need to go over to this other portal over here, I can surface that information right from the practice management or the legal management system as a lawyer. That whole embedded payments thing is the embedded experience front to end of the entire experience from merchant to cardholder existing inside of the software through APIs. And that, I think, is where integrated is sort of like this integrated things, two sides talking. Embedded is it's right in there. And the last thing I'll say is that not only does the next dentist or chiropractor graduating want everything to be in an app, but they don't want to app jump. They don't want to be jumping back and forth to over here, go to payments, go over there. They want the experience to be natural, interactive, and embedded. And I think that's where Payfac solves.
Yeah, I would agree. And it's when you mention healthcare, it's so much of what the evolution in healthcare with these practice management software is to not have your family member have to be in the office running your office as well with all the back end stuff, right? And you've now seen where these apps are really allowing these businesses to be run with just such it's efficiency really at the end of the day on like not only with the upfront payment experience, but what's just so important is payments. It used to be you go off into another window, you make it happen, you're going somewhere else, and now with these apps and with the embedded payments, it is truly just a seamless part of any technology company that you work with. So that makes it exciting, and which makes the evolution go so much faster than it was going yesterday.
Yeah, I think we can all agree it's going, trying to become invisible in the payments. The thing I'll touch on that might be a bit of a different perspective is on the enterprise side and the large clients and businesses out there want to transact where they have their investment in, right? Their ERP systems, their homegrown systems, whatever they have determined to be their center of work, that's where they want to transact. And so embedded is, yes, creating a seamless experience, but creating a seamless experience where they want to have that experience. And I think that that's really important because the one app isn't probably, for the dental office makes so much sense, but for the giant hotel chain or for these big enterprises, they've got all these departments and every department has a different view on what invisible payments looks like to them. And then they've also got their customer view. So it's on the inside, on the operations and on the customer facing side. So it's about having a lot of flexibility and making sure that you have things like APIs and all the resources available to meet those needs, no matter what the size of the business is.
Perfect point, if I could just add on to that. So, we used to all think Payfac was what, for like micro merchants and nano merchants and, all that kind of stuff, making it easy. But we're actually selling enterprises or districts.
Oh, yeah.
And what's happening inside of a school district is the athletic ticket director or the theatrical ticket director, they're really a micro nano merchant inside of this enterprise.
Exactly, yes.
And they want the Payfac, seamless experience. But the enterprise minds security, they mind regulations and compliance and APIs and ERPs, but they still want that Payfac experience. And I think there's a lot of market out there for us all to go after.
Oh, yeah. They don't want them going to download a random app that they haven't figured out yet. So you're spot on.
Yeah, and one of the things that's changed is card brand rules as well. Right. So there was certain requirements, dollar requirements that card brands have. Now it's more about merchant tenure, where, if a merchant's been on the books for a couple years, card brands, one particular, will allow for kind of the higher dollar amount to be able to allow for, one Payfac mid to process a whole lot more than what was the $1 million requirement.
Yeah, that's helpful. And thank you guys for all that. I think, the other piece to that, which can tie into this question, is you talked about enterprises, we've talked about SMBs, and I think the audience expands for Payfacs continually as we have more technologies that can be married together. And so how do you take very different business models with a Payfac model in place and say this is the solution and this is how we get you to have that customer experience? Because there's different areas, right, of the Payfac that can solve for different pieces of that. So how do you build that package for them and then communicate that to the market?
Yeah, I think that's where you've got that's where the fun side of what we should all be doing is solving problems, right? Because we know software is going to, moving at the speed of software is eating payments and all of this. but they're not payments experts and payments veterans and have that expertise. And so that's where we come in to solve problems, right? It might be PCI, it might be security, it might be compliance, it might be integration. It could be a lot of different things, but I think the problem solving hat is an area where we can still very much, be relevant. And also, by the way, a lot of the software companies, so like I said, we're a horizontal Payfac, so we try to serve a lot of different merchant category codes or MCCs. And there are a lot of software companies that are big enough, I think maybe that $2 billion top line processing volume might be a good number, where they're like, we're going to become our own Payfac. We're going to do this ourselves, right? We're going to go get some software, hire some underwriters inside, run our own program and whatnot. But I still think that there's middle ground where folks are somewhere in that where it's like, well, that's actually could be a distraction for them, and they might still need to work in a hybrid model, work with processors like Elevon and others to be able to not have to take on that risk, or they don't have the muscle memory to try to build out those kinds of programs. And so I still think that there's an area in the market. It's easy to look at this and say it's all running to software and we're going to be irrelevant and we're all going to be just the wires and the walls at some point, but I really think that there will always be a need for payments experts, payments solution solving, and we do that best.
At the risk of giving Rustin a full endorsement here, yes, I could not agree with you more. And I think that's where, and it's where the money is pushing these ISVs, right? So the venture capital, private equity firms, they are pushing these ISVs from the time that they are at inception, right? You have to go payment facilitator, you have to control the payment experience, and then there's also a major piece to it, which is valuation at the end of the day, because there's an interchange and assessment and all that component that now payment facilitators can include within their top line valuation. So that's a huge reason why payment facilitation has grown. It's because the money is pushing them there. However, if someone is coming in new, they're focused on their software, focused on their customer base, solving problems, as you mentioned, then these hybrid models have really started to pop up, where you can have an ISV giving a payment facilitator-like experience without having to be a fully registered payment facilitators. And we've seen a ton of evolution there, and I think for the next 12, 24 months, that's really where we're going to see a big push to where, we're not given single 5-page merchant applications to, ISV subs, or having those ISV subs even give a referral to a salesperson specific to payments. They're doing it within this hybrid model to be able to allow for that easy customer boarding experience without having the risk of payment facilitators on the back end, plus not having to deal with an entire staff. I mean, just running your payment facilitator business, you have to have a significant staff, correct? Yeah.
Yeah, and going to Rustin's comment about that, we're just going to be all computer run, but there's always a need for payment experts. I mean, I think the thing I found is when you're helping a company get paid faster, more efficiently, you're very valuable because they want to be paid. So I think there'll always be a need for expertise, and it's always evolving too. A lot of the conversations I have with clients is about trying to future proof, right? What does it look like in 5 years? If something we've done, is it so hard to undo because the next new thing comes about? Right, having those conversations about where's your business going the next 5 to 10 years. Look about how the macroeconomics are happening. I think some of those discussions are really helpful in determining what the best solution is, and what sometimes it's also a phased approach too. Like I think sometimes we are like, we're going to do this big thing. I'm like, well, maybe not tomorrow, right? So stepping back into it and figuring out what is the best plan for the business.
Yeah, because you would say that, I'm sure it's been talked about today as far as, the moving of monies, even from business to business invoices, right? And being able to just move monies as quickly as possible to be able to, get terms on certain deals or what have you. But in order for a business to make the payment, they got to get the money ahead of time. So we're going to see this evolution with FedNow where, it's not only with, the businesses receiving the monies, it's those monies going out way quicker than they once were, where you're moving net terms to a much different world than I think anybody would have ever imagined.
No.
It's going to put a stress on the risk managers, I think, when we start to have real-time payments as well.
Yes. What do you mean when we start to have real-time payments?
I mean, when it really
there.
starts to hit, I know you're right.
No, that's great. And this is, the types of conversations I think that we all in payments need to start having, because if we're not listening to the customers, then we're ultimately not going to deliver the solution that they need, and they'll look elsewhere or find someone that will provide that. So talk to me a little bit about the bank side. how do we believe, banks can support, some of the products and solutions that are coming to market, and how can they support Payfacs in that?
Well, I think banks are really well positioned. We've got a big view into the financial world and have a lot of different products, right? And so I think that's the good thing, right? I mean, we've got a view into what are the NACHA rules coming out for debiting accounts, right? We're usually pretty ahead of the game when it comes to things like FedNow because we're participating in pilots, right? Really, really well equipped with that technology and the payments, and there to provide that foundation for Payfacs and for payment providers that I just think, we're really just ahead of the game in that perspective.
Ahead of the game, but we will take our time. So I'm not going to sit here and BS the group and say
we are conservative, and that's also a positive thing these days.
No, I could not agree more, especially with some of the light of recent events. But I do think, what's a challenge when you're bringing in the banking world, or we're bringing in the banking world, is just you have ISVs that are so used to saying, I have an idea, I'm putting that in my next release, and that next release is going to happen in 3 weeks. It's going to take time in order to embed these payment solutions, these banking solutions, and I think it's just important to realize we still are banks. There's still a conservative nature to how we operate, so that we can manage risk appropriately and run through our certain processes.
Yeah, I think. I always say it's never been so sexy to work for a stable bank than it is right now. But it is important. So sometimes, I say it takes a little bit longer to get there, but then we're good, right? I mean, we really double check everything, and we work with our client to make sure they're protected in the Payfac, and even in like an FBO model. I mean, the bank is taking on that risk, and so it's a value add for our clients to work with us, even if it takes a little bit longer. I'd rather do something the right way than the fast way sometimes. So
I'm not a banker, and I'm not a lawyer, but I slept in a Westin last night, so I'm going to give this a shot. We talked about the embedded payments, and I think that's like the first wave, or the wedge, if you will, in the whole embedded finance, evolution that's going on, or MFI. And so we go back to our dentist and chiropractor. They want to run their whole business, and their whole business might be other embedded financial products, like a treasury, like a bank account, could be lending, at the point of care, could be bill pay to suppliers, payroll, et cetera, et cetera. And so they want to run all of that kind of stuff out of their software. They don't want to have all those different relationships. They don't want an app jump. They don't want a relationship jump. They don't want a relationship. They want to work with their phone. And so, that's just the way that they think. And so I think that the smart ISV and the smart Payfac and the smart processors and all of us, and that's why we're all doing this, right, is got on the horizon, how are we going to be relevant in a new MFI world where all the financial services are delivered within there. So they're not just doing the vertical work, not just taking the payments, but running the whole business, finance and all, through that app or through that desktop. And so I think that's where it's headed here, and embedded payments is a great wedge because everybody's got to take money in before you put it somewhere. So embedded payments is the tip of that spear, I think, for the embedded finance revolution.
Yeah, just look at some of the restaurant technology that's come out with some of the point of sale things that folks have come up with. I mean, it is truly running your entire business from one location, including being able to see how much money is in your bank account, which is insane at the efficiency that you can allow a business owner that if it's a restaurant, all they want to do is serve burgers. They are able to run their business and focus on what they do well, which is taking care of their customers.
I think that banks might have not the big ones, but some of the regionals and mid-size are going to have an existential crisis if they don't jump on this, because in that app, it might be, Stripe Lending or Stripe Treasury or Square Treasury, and all of a sudden some neobank out there has gobbled up the local business, and it's not my community bank, it's not my regional bank. And so I think, there's an existential crisis coming where I think that these banks need to, and I think we're talking to a lot of them too, right? We all are. I think people are seeing it coming, but where they need to be, participating as well, and there needs to be companies that help them participate in this thing, from embedded payments to embedded finance, so that they can, can continue to serve that on that local level.
Yeah, and the one other thing I'll add, so I kind of talked about the stability and, kind of the traditional banking side with risk and looking ahead of the payments, but, we also realize that fintechs, Payfacs, FBO models are really very lucrative for banks, right? I mean, let's be honest here. And so we're looking to see how can we best work with these types of clients? What processes do we need to evolve and change to keep our integrity, keep the stability, but meet the needs of those customers? So, sometimes banks get a bad rap for not being innovative, and I would challenge that. I think we are being innovative. We are thinking about what's next and how do we best serve our clients, whether it's the small, medium business or the large enterprise. And that's, a range of needs. So we're working through it.
Excellent. Thank you. And, another thing in thinking about the dental example, if I'm a dentist, I'm opening my first practice, walk me through what you believe, what are some of the considerations or factors when I'm trying to weigh the risk and reward of, is it pricing? Is it this vertical based solution? What all am I considering and making that decision to say, this is the model I need and, here's how I get there?
Yeah, I think it's like, to me, it's an activation. I'm in my software and I say, by the way, I'm also not a dentist, but if I'm a dentist, I'm in my software and I'm like, I want to activate the payments. And that whole experience needs to be activating a feature in my software, not making application and uploading documents and waiting weeks and working back and forth and all that kind of stuff, which has been the way the traditional experience has been. So I think activating payments is just a great way to look at that. I think the other part is, from a pricing perspective, from what we've seen, and I know you've seen it too, they will pay more for simplicity and transparency, right? If it's a simple price plan, if embedded in the software, they'll pay 3%, right, on that. Whereas, hey, they could probably go get interchange plus 10 cents or 10 basis points if they, really negotiated with a really hungry ISO out there. But they don't want to deal with that. They want the software that's already part of it. And I think the smart vertical SaaS and ISV providers will figure out a way to even embed their own SaaS fees inside of that. What we've seen, and I won't call it any names, but we've met with lots of different ISVs, and some of them are actually making more than 50% of their annual revenues in payments revenue. So in many cases, these folks have become payments companies already, and they know it. Like Stephen pointed out, their PE knows it, and when their PE is rolling up or buying them, they're looking at their payment strategy and saying, that sucks or it doesn't. Right. And so I think that the payment piece of it is got to be simple, transparent, easy, embedded, and I think the process needs to feel like activation.
Well, and we'll just to tie into that, on the customer experience side too, if they don't have the good experience, they could lose business. I mean, they could go elsewhere. And so, yes, they want it for their tracking and their revenue and reporting, all these things. But the actual customer could opt for another solution in this competitive space, and then they lose customers. Yeah,
I mean, right to your point, and I think you know who I'm talking about. Let's say you're a CrossFit gym software and it's Friday night and you're like, oh crap, I need to activate payments for tomorrow morning. I didn't get that part of it activated. Well, if you're with the traditional processing situation, you're not taking payments tomorrow. But with the Payfac, you have that ability to be able to maybe be live in 5 minutes and be taking payments that next day. And so I think some of these things, and if there's another software platform out there that's your competitive CrossFit gym software, and they're out there and they're faster, you might only have the option as the user, as the gym owner, to say, well, I have to go with this one because it's the fast option and I need it because I don't want to look silly and my grand opening be a flop. So sometimes I think people can make buying decisions based on this.
Yeah, I would agree, and at the risk of a government like Canada getting involved in regulating interchange for small businesses, what we haven't seen, Rustin, is what we thought would be the evolution to, okay, fine, they're going to pay 225 or 30 for their first, let's say, couple years, and then they may look as they mature for a better priced. It is so hard to come off of whatever system that they're on that we've seen very little of that in the industry, where folks were predicting that when those maiden disintermediators came into our market.
And you look at PayPal, they went from 3% or whatever it was, 2.9 to 3.49% if you use their invoice feature. Right. So they went the opposite way. Exactly. They raised the price.
Yep.
For me, I think it's about the balance between, price, vertical experience, customer experience, but then support, right? I mean, look, the dentist office, even the big enterprise, this may not be their expertise. That's what we're here for. So can I call up the phone and have an opinion that I trust, that's consultative, that's going to help me through? I think it goes back to the conversation earlier. What support is this provider giving to me. I think it's not just what's on paper, but what's the relationship there. And that's huge, right? When you're like, I don't know where to take my business. I don't know what's evolving. The person should be there to help you through that. And so I think that's always really big.
Excellent. And kind of thinking through, these trends where, we're bringing new products to market based upon what the customer is desiring and advocating for. Are there some that have evolved and have not stayed relevant that you've seen, or do you believe that everything the customer has advocated for and we've brought to market, that these have played well with what's already existing in the Payfac place?
You want to take it? I mean, to me, the conversations that we've had with ISVs and vertical SaaS to date, it's still a consultative sale. A lot of folks don't get in the business of building the software out, in the startup phase with payments in mind. That's just a feature that, we need the developer to hook up, and that's why they go with Stripe, right? That's the easy button. 7 lines of code, and, you're off and on your way, but zero lines of revenue. So, no revenue share, and also you're stuck at a higher rate. And so a lot of them get locked in here, and they're not thinking about things like portability of my card data, portability of my merchant data, portability of the agreements, and if they are, they're thinking about paper portability, not practical portability. Can I actually move this when I need to? They're not thinking about the exit valuation. They're thinking about why they got in the business in the first place, which is the software. So most of the time when we're interfacing with vertical SaaS, they're in the coming up on $100 million in TPV, right? Because now that 1% that they're going to make is $1 million a year, and that's important for their valuation at their Series A or their Series B, where they're at. It's going to be meaningful. Below that, it's not as meaningful for them to make changes, and they might not be on the radar of anybody that's providing them sort of a consultative approach or as an analyst or a consultant. So a lot of the folks that we're dealing with, we are actually kind of acting as, as Madison said, as a de facto consultative sales approach, where we're like, hey, have you thought about this? Have you thought about that? Have you thought about security? Have you thought about your partnership? Have you thought about how you're going to move your data? We've had folks come to us who are in the market, exiting their company, and had to pull out because they've realized that any buyer of them realizes that they're not going to be able to get their card data and their merchant data out of, I'm not going to say who, but the big coastals. And so I think that's an important thing, that these softwares, as they cross the chasm from startup to success. And so we actually haven't been asked about a lot of new things. It's usually us who are coming up with, have you thought about, the things that, the blocking and tackling of Payfac, and we're kind of like doing a little bit of futurescaping with them and saying, hey, also, you need to be setting yourself up for exit. And also, by the way, it's nice that you're making 100 basis points here on the embedded payments, but boy, you add it in treasury and embedded finance, and you could be doubling and tripling that, So I think, that's kind of how we're focusing on it. I'd like to say there's a lot of new shiny things right now, but sometimes just the standard offering has been attractive enough.
And to your point, Morgan, it has not worked for everybody, right? I mean, there's a story during COVID, a food delivery service in Canada, right, that just completely went out, and you would think food delivery service during COVID, holy smokes, they would have, gone like gangbusters, but, they go out very, very early just due to, less risk management. But to that point, that's why as we develop these, embedded banking and various items, the risk piece in profile becomes such a larger and larger piece, because you're not just evaluating the risk on the payments, you're evaluating the risk on various treasury solutions, et cetera, et cetera. But yeah, it has not worked for everybody, and I think that's why we've seen this evolution of hybrid models continue to grow and grow. Experience with the payment facilitator that at one time was, hey, for subs, come one, come all, and they have completely shifted their model just because of, you take a pop or two and having to explain that to your board. That is, not a fun experience, and all of a sudden that one idea from the private equity guy, he's sinking in his chair because, they just took a $5 million hit.
Yeah, I mean, I would agree. I don't think I have much else to add. I could go on and on about risk, but I don't want.
Well, and I think we have seen that there's a good risk question I want to get to, but I think that we've seen a lot of ISVs that have hybrid models, and they play that to their advantage in many scenarios. And then maybe it's, a merchant-specific use case to whereas they really need this other model for XYZ reason, and then they have that offering available. So I think that's, compelling as well. On the risk and regulation side, Madison, can you just tell me how, there's the merchant risk, the sub-merchant risk, there's our overall ISV risk, but there's also risk or regulations that have to be adhered to by the card brands. How do banks keep up with that to be able to translate that down to Payfacs that they're working with?
We have a lot of teams who basically pay attention to that.
Okay.
We have teams who sit on boards and meetings and make sure they're up to speed on everything. And, I think one of the great things about Elevon is that it's owned by US Bank, right? I mean, so we're getting the merchant side of the view and the bank side of it. And I mean, to be honest, we have a lot of teams that are out there, and that is their sole job, is to understand it and make sure we're compliant and make sure that we're telling our customers and that that's out there. And so, I mean, that's one of the beauties of having a large bank, right? Is having that team behind you that's fully focused on it.
Yeah, if you're coming out of college right now and you want a job in finance, you go into compliance, because there's a lot of compliance jobs that will continue to grow.
Yes.
Well, and it goes beyond payments, right? And that's the other piece of it. And as a business owner, how do you focus on your core business? You don't have time to do these other things, and so that's where expertise like this comes into play. Okay, well, I want to kind of wrap up with one question, and if we have time for questions, that'll be excellent. If not, we're all happy to take questions afterwards. But just, thinking crystal ball future, where do you see, and thinking of all the evolution in the past few years, where do you see in the next 12 to 18 months new products and markets evolving, and how Payfacs can serve those?
Gosh, I've gone on about embedded payments, embedded finance, so I'll have to pick out something else. But I see, and it's not all ISVs. As we get to the ISVs that are serving sort of enterprise-wide and enterprise size, they want more feature-rich functionality. And Payfac has been largely focused on e-commerce and digital acceptance, let's just say. And one of the things unique to us, I think, and also I know has been very unique to Bluefin, has been the focus that we've all had on devices and on point-to-point encryption and how do things happen in the field. And I can just, coming out of the pandemic, we saw a big rush for ticketing, for schools, for municipalities to re-terminalize, because people wanted a contactless, touchless, experience. And in some cases, they don't even want a device there at all. They don't want a queue, so they want people to do QR codes, in-app purchases, and then come up and tap and run. Even though it's kind of over, it's just that people want a different experience. And so that created a huge glut of demand for devices. And then you got chips and ships and China and trucks and cardboard and all these things that that we're having problems getting access to, which then constricted the supply of devices. And so I think that what we're going to see coming out over the next few years is a move to MPOC, which is the PCI standard mobile payments on basically cell phones, but COTS, consumer off-the-shelf devices, where these things can be tap to pay inside of the phone. And this is going to help. This is actually going to help Payfac, but also businesses and software grow at the speed of software, not at the speed of how fast can I get a credit card device. So,
right.
And if they need to expand and contract at the gate because it's the big game, mom and dad can go, volunteer and download the app, and all of a sudden you've got another point of acceptance, right? Point of interaction. So I think some of these things that are coming out from the PCI Council and this sort of deviceless interactions, I think that that's going to be a thing that software is going to really want to demand as it starts to grow in that way.
Yeah, and I know that in speaking with, the partners within the ecosystem too, the mixed portfolio of different payment acceptance methods have completely shifted. You're seeing more text to pay, digital wallets, and we're pushing away from ACH in certain areas, by vertical, and so that's already happening. So that would demand different types of products, to your point. So.
I mean, it's a few years ago where someone did a great demonstration at this show about just the security technology on a terminal versus security technology on a phone. And I think now, like Payments Council, card brands, they've heard that message loud and clear, and that's where the evolution is going. And then, not to steal your thunder, but I would say that for us, what we're hearing a lot about is just FedNow money moving as fast as possible, and how to just make that work within the current antiquated payments ecosystem to be able to allow for these types of monies to be moving so much faster than they once did.
Yeah, you kind of did.
I know.
That's a
Hey,
big-
we're both bankers now.
I know. Well, yeah. I mean, just to kind of round that up. I mean, I think it's not just card, right? It's it's looking at different payment rails, and that's settlement too, right? I mean, RTP is 24/7, no bank holidays. Being able to settle immediately into bank accounts is huge, right? So it's not just about what is the payment acceptance, but how is that being settled throughout the business and allowing the business to run 24/7. So I think we'll just continue to evolve that, and like I said, real-time payments is here now.
I'll give you an opportunity for additional thunder since Steven stole it.
Thanks.
So with that, real-time payments, because this is a topic I've been hearing a lot about. So with these vertical-based SaaS organizations, they want reporting and reconciliation. It's mission critical to their funding. So how do you take what's currently 24 to 48 hours with real-time and support reporting and reconciliation to the clients?
Well, first of all, real-time payments has really rich data associated with it. So the data is moving along with the transaction. So, the reporting can all be set up and automated and pushed into the system. You're right. There's a lot of systems out there that are still running batch reporting. And, those, to me, that comes back to who's your partner? Are they a consultative partner that can help you figure out all pieces of the puzzle and not just, oh, here, go ahead and, implement this new payment rail? Like, well, what are the ramifications down the line, right? How is that affecting Susie, who's reconciling the books every Friday, right? And understanding that process, being able to make pinpointed recommendations, and having the IT support to implement everything. So, I mean, RTP is set up for great data reporting, all the information going along with the payment. But yeah, I mean, with any new thing, you're going to have to figure out what's the down
And then
effect.
how consumable is it via APIs and things like that. So
Absolutely.
excellent. Okay. Well, I think we have a couple of minutes left for questions. So I want to make sure we have a little bit of time for that. Should there be any, please feel free to ask and we'll be happy to field those.
I've got more of a comment than a question. Having been in this space, I think one of the benefits of this model that I hadn't heard is the fact that you're in charge of instructional funding. So you can not only pay next day without having to take a float, you can do the real-time payments, and if you have an ecosystem with an ISV, with an app, say, connecting consumers to drivers, to a restaurant or to a pharmacy and a pharmacy delivery, you can end up splitting a single payment and pay all of the parties in that ecosystem at the same time. And if you do it outside of the Stripe standard, then you can have the branding, the revenue share, and it can further your business and get you into new verticals.
Great question and comment. Totally agree, and it's one of the biggest powers of Payfac that has not been explored as much outside of the payout models. Like you see that, like we see with Stripe, that's happening, and I think it's an area that. So, for example, we've got a partner that sells tickets, right? Like I said, to games, right? And so you've got the VIP, which is a different group. You've got the they need to get paid. You've got the parking that's owned by a foundation or it's affiliated with the university. You've got the software. You've got the actual school, and then you got us. Like 5, 6 different folks that need payouts. And if you just paid the school, internal invoicing and interdepartmental all the friction that causes, that a simple payout mechanism in real time, boom, pushes it all out to the right places. That's really awesome, and I think that's an area for much focus that I think could be focused more on by a lot of the Payfacs. But right now it's either you're in a merchant model or a payout model, and people sometimes kind of conflate the payout model with the marketplace model. But I think it goes beyond that. It's not just like Etsy. I don't have to have a merchant account, I just get a payout. I think that these kinds of solving enterprise issues with multiple areas that need to get paid and participants to the transaction that might not be the actual seller. I think that's a great place for Payfac to be. Yeah. Thank you.
And direct invoice billing, we've heard that from several ISVs as well. They want that mechanism to pay all parties, and then going back to the payments, moving that money as quickly as possible to all parties. So that is a terrific point. Thank you. Any others? Look, 1 minute, 16 seconds is what I hear. So I think that we have
have
oh,
another.
no. Okay.
She's
I'm
got
ready.
More.
Nobody's running down the mic. One other thing that I thought of based on the conversation up there is if somebody does want to get into the Payfac space, they're technically becoming an ISV if they're going to be in like the practice management software at the dental office, or if they're going to be in a NetSuite or some SaaS system. So them being an ISV in a list of different solutions and a pull down in an ERP type system, they need to pair up with the VARs that resell that in order for their Payfac to scale and to become sold as the default solution for that VAR reseller. That's the key to success in that integrated channel.
And you're recruiting customers too, right? If you're sitting on some sort of, works with platform or an app exchange with another processor, you're having those ISVs be able to potentially gain customers by being in a pick down list specific to a certain industry. So could not agree more. Really good call out.
Excellent. Thank you, everyone, for your time. We appreciate it. Thanks to the panelists.
Thank you.